Good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is basically the same as it was yesterday. Nothing too new going on, except thanks, Dave. The market's bullish, in case anybody was wondering. I think me and Pat were having a competition on who could be more sarcastic about how bullish this market is. Um, if you are a bear, you felt good for a little bit this morning. Depending on how early you woke up, you had a little bit of time to feel good about yourself. If you got up at 6:30, you had 2 hours to feel good about yourself. That's a good one, Rich. If you got up at 5:30, you had 3 hours to feel good about yourself. If you got up at 8:30, you didn't have any hours to feel good about yourself. This market was a little weak after hours yesterday. Futures were down decently last night, 0.5% or so. About the same again this morning. So we were trading down. And then PPI came out at 8:30. And PPI tends to not be as market moving as CPI, but it can have like a nice little add-on effect, I think, if it confirms the CPI, if the data reads the same. And after we had a light CPI yesterday that failed to really manifest us higher to where we probably should have been, we had a PPI come out today that was also light, and it really helped boost this market higher. Prior to the PPI, there was a little bit of nervousness out there. Things are uh, heating up insofar as tensions in the Middle East, Israel and Iran. We started to see, for the first time in a while, some degree of trade related uncertainty give a little bit of heaviness to the market yesterday after hours, a little bit of heaviness to the pre-market this morning. The China London conversation did not yield anything new. It just brought us back to where we were a couple weeks ago. Japan says we're very far apart. Lutnick says that the EU is going to be last, so I guess we're nowhere close with the EU. Trump says that we had diverging statements from Trump and Besant, right? Trump is basically saying that in the next 1 to 2 weeks, he's just going to give people a deal and they can take it or leave. And at the same time, Besant is saying, well, we've got about 8 countries that are really important that are working to negotiate with us in good faith, and we might need to give them some more time. So two kind of opposite statements there. But the uncertainty, the Middle East, all that stuff seemed like it weighed on us a little bit yesterday. Seemed like it was weighing on us overnight, pre-market this morning, and then PPI came out. It was nice and light. What inflation? There is no inflation, at least no inflation yet, because we're not seeing the tariff stuff hit the economic numbers yet. But for right now, the data that still seems to primarily reflect pre-tariffs is showing us that inflation was continuing to work its way down, and that's great. And CPI plus PPI potentially gives the Fed some room to cut from an inflation perspective. Same time, the economy and unemployment's been going so good that they probably don't need to cut. But if they really want to juice this market up, they could. Or you could make an argument that we should cut just to lower to some degree debt, the debt interest rate payments on the reissuance of our new debt. Though obviously there's market forces that come into play there as well. But all the same, PPI was light, and we boosted off of it. We said, let's pay attention to the starting number. We never got close to the starting number. So we boosted off of it back to 600. The market closed, and we boosted another $3.50 after the market opened. Sorry, the market opened, and they boosted another $3.50. So we are back to looking good. We were not looking good, to be fair and clear on it. It's kind of what I was saying in the morning meeting. Like things felt a little bit bearish. We were getting a gap down, some negative headlines out there. We were a little bit heavier than we should have been yesterday. Um, U.S. Secretary Lutnick on China deal. We're not releasing engine parts yet. Lutnick on China deal. As magnets flow, we'll drop our countermeasures. I'm not sure if that's moved the market at all. But like I was saying in the morning meeting, even prior to the PPI, we're gapping down to the EDMA on the daily in a strong uptrending market. This is, by the way, if anyone listens to Sami Abu Saad a lot, or even a little, one of the things that he talks about a lot when we do like our Wednesday meeting is to never short the 45-degree angle uptrend or buy the 45-degree angle downtrend. These grindy trends, there's no signal there ever to go the other side on those until they break. Sometimes they break to the upside. Sometimes they break to the upside and you get like a parabolic move as the upper channel breaks its upper channel kind of resistance zone, and then and that actually can be a shorting signal. It's like you're grinding up, you're grinding up, you're grinding up, and then the bulls get too exuberant. They break it to the upside. You go parabolic up, and that actually can be perversely the end of the uptrend. Sometimes you get the opposite. You get an event or something like that that causes the upper channel to break to the downside. But when you're in it, there's no reason to go to the other side because the 45-degree up channel never gives you that type of extreme extension that you want to short. And you never really get the big enough of a boost higher in a short enough period of time to give you the $10 plus of extension off the ADMA on the daily that, for example, I like to look at as an extreme extension rule or guideline, I should say, to potentially come the other way. And that's where we're at. We had a little bit of a chance on some heaviness this morning to break down. PPI came in light, and the market did what it does every single day, and it went up. And right now, we had a great close as well. By the way, we broke through highs for the S&P right into the close on the MOCs, and um, we are right back to looking like we're heading to all-time highs, which we were looking at that yesterday morning, and then we got a little bit of applause on it. Maybe things could have been different, but they're not. They're the same. We look like we're going to keep going higher. We look like we're going all-time highs. The trend on every time frame is higher, and it seems like we don't even ever get like a real down day anymore. It's kind of crazy. We haven't like had like a real market pull in. We had one little baby one here in mid-May, but outside of this little baby pullback in mid-May, we haven't had a market pullback in 2 full months, which is kind of crazy. And there is still room for this market to buy more. Corporate buybacks, we go into the blackout window a little bit on Monday, so we'll lose that bid, but we should be getting well control back again soon. So, market is full steam ahead. I do think this market could collapse on itself if we were to break lower, but you have to actually break lower. And by collapse, that's probably the wrong word. I don't think that we get like a massive volatility VIX spike. I think that you could more go into a grind lower, like one of those down markets where the VIX never actually gets too elevated, but you kind of continue to bleed out. But you need a catalyst for it. You need weakening economic data as a catalyst, or you need a technical catalyst, one or the other, that could lead to a little bit more of a feedback cycle of sign that comes in the market. And we don't have that. And trying to predict the timing on that is a fool's errand. So, like, same thing I've been saying every day. Wait for the signal. Wait for this to break to the upside and give us all-time highs and an extension short. Wait for this to break to the downside because something bad actually happens and the market cares, and then you can press for follow through on the break of the channel to the downside. But don't just blindly short and blindly fight this uptrending market because your guess is as good as mine on when it's going to end. Outside of that, it was kind of a boring trading session. Real pre-market this morning, 8:30. I had my bear hat on. I was thinking maybe we could get some follow through, but pretty quickly, I would say by 6:10, I was like, yeah, we're not getting any follow through. Well, if not by 6:10, by 10:05, because there was this little attempt at creating a pivot high and a pullback. I think I might have even have called a short off that high, We had a quick little pullback on it, and then we had new highs, and the idea of looking for anything to the downside is off the table. And in fact, you should probably at that point should be flipping your mindset and looking for the upside. Everything is strong. Um, we continue just to get rotation under the surface that leads for a strong market. At a certain point today, it was like the market was moving higher, but look, Apple's not moving higher. And look, Amazon's not moving higher, and Google's not moving higher, and Meta wasn't really moving higher. But to make up for it, Microsoft was going bananas again, and Nvidia was really going bananas, retesting 145. Nvidia has been underperforming the semiconductor ETF for the last like 5 or 6 trading sessions. It looks like it's ready for some catch up, and it's a big market cap weighting that can propel the S&P and the Nasdaq higher as well. Micron, some of us kept Micron short yesterday. It looked great this morning. It looked great. I thought we were going to get a pullback to 110 to 112. 112 is kind of being a real target. 110 is being a little bit more of a reach target. I thought we were going to see it today, pre-market. And then 8:30 happened. And then Bitcoin resumed its strength, and Nvidia was leading higher, and semiconductors are the future. So, yeah, I mean, this market just continues to be really strong. Palantir was notably weak, but it didn't fail. Um, I remember at certain points throughout today's trading session, we were like, wow, Palantir is trading really weak. If the market could pull back, maybe there's a chance that Palantir loses the 134 breakout level, and that would be very notable. But the market doesn't pull back. Who am I kidding? At a certain point today, we were like, ooh, Tesla's acting weak into that 325. And Tesla actually did give a little bit of a follow through. We got a quick uptick there at noon when Elon and Trump were just telling each other that they love each other again, and the market moved higher on that. But then they did fade it, and it closed a little bit weak again. So that was notable, interesting to see that Tesla's back below that 330 to 333. I think that while Tesla is below the 330 to 333, it's more of a short than a long. If it can recapture that level, it becomes more of a long than a short. But it's interesting to see that they sold it down in those Trump headlines about them kind of becoming best pals again and wishing each other luck. And he wants to have a conversation with Elon about the EVs so that they can make up and be friends. But outside of that, that's pretty much it. Still just continues to be displayed under the surface. If you can show me a chart that's a important market weighting in the Nasdaq that's weak, I can therefore find you a chart that is important from a market weighting perspective for the Nasdaq that's strong. That's how dispersion works. And the market, as a result, is able just to continue its upside grind. And it's really where we're at. There's not really any new updates outside of the fact that if you thought maybe we had a little bit of a bear signal yesterday because we didn't go up as much as we should have on the light CPI, well, it's kind of gone. With that said, we do want to keep in mind a couple small factors. We do still have a little bit of a VVIX divergence, and the VVIX closed strong. So that's one thing that I would note. This VVIX can really be a leading indicator sometimes for the market. So we got to continue to watch that. It was like the note that I posted in the VTF this morning said, watch the VVIX. If you see this VVIX really begin to fade back towards the low 90s, then any chance of the market pulling back is gone. If the VVIX is able to continue to diverge and continue to accelerate, then maybe we actually do have an opportunity for this market to break that upward grind trend to the downside. Though I would still say let the market prove it to you before you actually push lower. The only other factor I can point to is that put call ratio that we spent a little bit of time talking about this morning. I think it was at 0.59. That is extreme bullishness. It's such extreme bullishness from the put call ratio that sometimes it becomes a contrary indicator at that point. So there's a couple signals still underneath the surface. I mean, I've been saying it for a while. There's little things that are pointing to us being late stage in the rally. The fact that the IWM had started to outperform, the fact that the short basket had underperformed, but that's kind of gone now as of today. Another thing that I was pointing to was the fact that they sold us on good news yesterday, but that's kind of gone after today. The market technicals are super bullish. So the only thing, if you want to really grasp for grasp at thin air, is the little bit of the VVIX divergence and the put call ratio. But those are just two layers of probability within the confines of every other layer of probability that looks bullish. But we should pay attention to it, especially we've certainly seen that VVIX divergence in the past lead to something change. So that's all I got. I am happy to take a look at any thoughts or any questions that you guys may have. Love that picture, Rich. Thanks for posting that one. It's a real good one. Adobe's out after hours here. Looks like Adobe is hit down a bit. Not too dramatic. Trading at 408, 409, but they are hitting Adobe down a little bit on its earnings report. Adobe beats on earnings and beats on revenue. So I don't know if it's a guidance or if they just didn't like it enough. From Robo on the Tesla reaction, I just talked about that one. From Greg, the slight VIX and VVIX divergence could, in theory, be 100% attributed to people paying up a little for a bit of downside protection through the weekend because of the Trump and Iran and Israel potential for an event. It is not necessarily a harbinger of such event. Just confirms there has been an increase in implied vol. Uh, there was something in the JP Morgan note about looking for risk premiums to be looking for risk premiums to be covered, paid for into the weekend. Yeah, and that's what I'm saying. We've got two tiny noticeable things with the VVIX and the put call ratio right now within the confines of many, many, many others that just continue to say full steam ahead on the bullishness. And they started to point out. I read a note last Wednesday morning or Tuesday evening that I think was noting the VVIX divergence really started on Tuesday. And it was the same thing. They were like, well, maybe we can just attribute this to it being right in front of the CPI. So we'll see if the VVIX comes right back down after we get through the CPI event. And you could say the same thing about buying some protection, for this weekend. So maybe we get through this weekend and that VVIX comes right back down. So, it's kind of like that original note was saying, pay attention to it. If the VVIX comes right back down because we got through whatever event was spiking it a little bit that people were getting protection for, and we're right back down into the low 90s, the market's going to be working towards all-time highs, and this was meaningless. If it continues to hold up here, if it stays above $100, through tomorrow, through the beginning of next week, it becomes significantly more notable. But layers of probability are exactly just that. They increase or decrease the probability of something else happening. So one additional layer, one I guess two layers of probability that point towards market downside within the confines of everything else that points to market upside. It's notable. We want to pay attention to it. It's not necessarily actionable, but if you pay attention to it and you note it, and then you get an actual break of the technicals, it can give you a little bit more conviction. It can say, "Oh, I already knew that the VMix was diverging. Now look at this. The spies are breaking their upward channel to the downside. This could be something I could look to push. This could be something I look to execute." So, we'll note these things. They don't mean anything in and of themselves. I would not say, "Hey guys, VVIX is diverging. Press your short buttons. Go max BP short tonight because we're gonna get paid." I wish it was as easy as that. And I appreciate you pointing that out, Greg. What am I doing in June? Tomorrow I'm gonna be leaving a little bit early. I'm probably leaving at like 2 p.m. So I'm gonna miss the close. To get to the airport, I got this flight to Paris tomorrow, but I'm also doing like this global entry interview, which I probably should have done a long time ago, and I've never done it. So I got to get there a little bit early to the airport to do that. So I'm gonna leave here at like 2. I'm gonna be in France all of next week, but I'm gonna be working every day. Next week is a 4-day work week. Monday, Tuesday, Wednesday, Friday. I'll be working all those days. I'll just be doing it from an Airbnb in Paris. Then that following Monday, I will be taking off entirely because I'm flying on a Monday, which is a little bit annoying from a trading perspective. but I'm flying on a Monday from France all the way to Los Angeles, which kind of sucks, like a 15-hour flight. But whatever it is what it is. We have a wedding out there to go to. So I'll be in LA. Oh, thanks for reminding me. I'll be in LA that week. And I keep meaning to say this in the afternoon and morning meetings, and I keep forgetting. So if someone can remind me in the morning meeting again tomorrow. If anybody's in the Los Angeles area, a bunch of you guys, I kind of know you well enough and I know where you are, but just assume I forget, because I do forget and I might not know, or I might forget you or whatever. And, don't take it personally. Just we got a really big team and that's great. But if anybody is in that Los Angeles area on the Wednesday that I'm in LA, which is Wednesday the uh, 25th. I'm looking to put together a little bit of a T3 happy hour kind of thing. I think it'll not be too big. But if anybody is in the Los Angeles area and wants to meet up, if you don't shoot me an email, I'm not going to invite you, even if I know that you live even if I know you live in LA and you're my best friend. If you don't shoot me an email to remind me, I'm not going to invite you. So if you want to come to that, shoot me an email. I'm going to try to put that together. I'm trying to work on a location. Mike Reed's been trying to help me with the location a little bit, which I appreciate. I just don't know the LA area very well. I'm going to be staying in the West Hollywood area, so probably maybe we'll be in that zone. I'd be happy to do it in something that's away from there if it's more centrally located for people. But I know that LA is really spread out and difficult to get around. I think that the only good news is that the market closes so early in Los Angeles that we might be able to meet somewhere before the big rush hour traffic starts. So hopefully people can move about and get to wherever we're meeting up. Maybe I'll try to make it like a 3 or 4 p.m. um, thing, so that people can try to beat like the crazy LA traffic rush hour. I've only ever experienced that once, and that was 2 summers ago, and it wasn't fun. It was not fun. It was crazy. Anyway, thanks for asking, Rich. Thanks for reminding me that I want to remind everybody about potentially coming to that little happy hour thing. From David regarding GameStop. The 9:45 a.m. 5-minute candle with the upside tail. Yes. Is too far from the ADMA to have shorted for the ADMA catch up pivot grade, correct? Yeah, I think so. I think so. You can still try it there, but I think when it doesn't touch equilibrium, like it doesn't get at least close to the ADMA, you have a much higher probability of it being a false signal and a failed trade. You can still try it anyway. You might get enough of a move to be able to get your risk covered, but I think a lot of the times it's going to end up being a false signal, even though this one today happened to work perfectly. A lot of the times, I think when you get it too early and the equilibrium hasn't caught up, then you get like a tail, and then you get like a real quick pullback. Next thing you know, that high breaks, and then maybe the real trade even actually occurs. So you could try it, but I greatly prefer it to be closer to the equilibrium zone. I appreciate the question. From Liam, do you think it is a mistake to narrow my focus on strictly indices and more specifically the teachable Q? I feel like the technicals are a little bit easier to read, but upside for intraday trades on the lower size that I am trading is also limited. I don't like the idea of narrowing your focus that much, to be honest. I think that you should. Um, I think that you want to be a little bit more open-minded to than just trading the indexes. Sometimes I wake up and I look at the indexes and I don't feel like I have a strong advantage. And that's the best part I think about being a stock trader versus being like a futures trader. Is the futures traders I know for the most part they all just trade the ES, the NQ, maybe the IWM, maybe a couple commodities like gold and oil. Um, if you're an equity ETF trader, then if you look at the ES one day or the NQ one day and you say, hey, I don't feel like I've got a strong advantage here because of where we're set to open, whatever, you've got all these different stocks and something can have news, something that could be in play where you could focus on that. So I don't think that you should narrow your focus that much personally. I think that you'll be actually restricting reward. I do get or restricting opportunity. I do get what you're saying though. I get what you're saying about like, hey, maybe you're a little bit of a newer trader and you don't want to be spread so far out, 3,000 stocks. You don't understand how a lot of them trade. Stocks are almost like people. They have their own unique personalities. We even have terms that we use that we describe stocks with that we also sometimes describe people with, right? Like thick and thin, as an example, which obviously that's describing liquidity. It could describe people potentially also. Um, so, every stock has a little bit of its own unique characteristics. So I don't think you want to spread yourself so thin that you're looking at 3,000 stocks a day, but I don't think that you want to be so narrow that you're only looking at T triple Q. There can be good opportunities to trade some other names. I think that you want to try to focus on the names that the group is trying to focus on. Because a lot of times there's a reason why we're focusing on those stocks. They trade well, they move well, and because we're focusing on them, you can communicate with us with your questions that you might have to get additional feedback on what you could be looking at or what I might be looking at when I'm looking at an individual stock. Um, so I hope that helps. I do like a glass of champagne once in a while. Uh, yeah, sure, John. Um, Dave asks if you trade the Dow futures, you need to stretch more often. Okay. From Liam, yeah, looking back at the prop reports, almost all of my significant green days are from names like SMCI, Google, Reddit, the fun ones. Well, there you go. There you go. It's good stuff. You're learning those names. All right, let me pop over to the YouTube, see how folks are doing over there, see if we have any questions. Click. From Robert. Do you know any website where we can see individual companies buyback data, how much they have left, what prices they were buying, etc.? Um, so not to a massive degree of information, but I typically just use AI for that. Really more for how much of a buyback they have left. I don't know what the reporting rules are on that. I don't think that they have to be reporting, for example, how much they bought back on a day-to-day basis. I think that they tend to report that information only on a quarterly basis. So you can kind of only know how much a company still has in their buyback program and how much of that buyback program they've already purchased, updated on a quarterly basis. Otherwise, I'm generally assuming that they're buying whenever they're not in their blackout window. But I don't think that we can get that information on a day-to-day basis unless you know someone at a big bank who actually is executing that stuff. I don't know if they're even technically allowed to share it. Um, and I don't think that we can get information on like what prices they bought. Unfortunately, I just don't think it's disclosed. So no, I use Perplexity AI just to ask it like, hey, if I'm doing research on a stock I don't know, or even research on a stock I do know, hey, does this company have a buyback? How much is their buyback? How much is left on the buyback? Things like that. So that's about the extent of it. I am not worried about the being in Los Angeles with what's going on right now. My understanding is it's just in a small area of downtown, and I'll just try to avoid that area. Um, and if I find myself there, I'm sure I'll be fine. Also, to be honest, just gotta keep an eye out on your surroundings always. Whenever you're in any metropolitan area, whenever there's a lot of people around you, you got to keep your eyes open. Never know what's going to occur. And if you are not in a metropolitan area, you never know. There could be a bull that's about to charge you from behind. There could be a badger that's about to attack you. There could be a mountain lion in a tree. You always got to be prepared. You never know. You never know. Could be in the hills. Could be in the cities. Always keep your wits about you. Oh man. Cool. Not too much going on the YouTube. Back over on the VTF. Um, What do you make of CHYM trading down and slow? I didn't watch it at all. I watched it when it first opened for like 15 seconds. I wasn't interested. I don't make anything of it. I didn't do any research on it. I don't know how hyped it was. This is more normal. It's not normal for IPOs to do what CRWV and Circle have done. That's what's not normal. And CRWV didn't even do it right away, right? They waited a little bit and then it broke that opening high, and that's something that's worth paying attention to when it establishes a range for the first few days. If it breaks that range to the upside, it could squeeze. But I'm not going to overly read into just one IPO not giving a fantastic performance. I'm sure that the people who do underwriting are paying attention because they will probably want to get a lot more things public, but they thought it wasn't a good time. But then when you're looking at the core weaves and the circles of the world, maybe it's not a bad time at all to get some IPOs public right now. I know that there were some that were set to go public in like March and April, and then they had to pull them because the market deteriorated so badly. From Gus, when you say the stock is trading well, what makes you say that? Is it relative volume, any other indicator, reading the tape? How do you gauge that so we can do it ourselves? It's a great question. I'd love for you to ask me that in real time when you hear me say it, so I could say, give you feedback on why I said it specifically on that stock. But just generally, it probably means that there's a strong underlying bid to it. It's trading well, it's trending well, they're buying it up. How I see that, it probably depends on the circumstance and the chart and the tape, a combination of both. But it's kind of just generally what I mean. And then again, if you catch me saying that in real time, just ask in real time, and I'd be more than happy to give you feedback on what I'm saying and what I mean by that in that actual moment. I appreciate the question. Eli says no one goes to downtown LA. Okay, I'll stay out. I'll stay out of there. I'll stay out of there. I've heard I should stay out of Compton. That's about all I know. uh, from Liam. Today during the bond auction, the rate was higher than the expected, and both TLT and the Qs traded up. Shouldn't that be bearish? So I actually missed this. I was in a meeting and I missed it. Shouldn't that be bearish for stocks? And I missed it, and then I went, I looked, and I saw that the reaction in the market was muted, so I just like kind of ignored it. Um, so I didn't actually read it, and I'm not a bond expert, but so the rate was higher than expected. So if the rate was higher than expected, that probably means that demand was light, is what I'm assuming. But if TLT went higher, that says the literal opposite. It says that demand is strong, and that's why TLT is moving up, and therefore interest rates are going down. So on the surface of what you're saying as you're posing the question, yeah, it seems like it should be bearish for stocks if that happens, but I don't have enough context there. The rate was lower than when issued, which is bullish. Okay, perfect. Thank you. That makes more sense. So what Chris J there said, you have to look at the rate versus when issued. Um, Skid Row has good street food. I don't know what Skid Row is outside of the band. Avoid Venice. I so as someone who has lived in the East Village of New York City for a really long time, that Venice Beach area was always actually an area that I really really enjoyed in Los Angeles, but I haven't been there in years. Even 2 summers ago, I went to LA 2 or 3 times. I don't think I went to Venice at all, but I felt like I fit in there. Just felt like my people at the time. Yeah. It's nice during the day. Okay, cool. I'll only go during the day. Thanks for the advice. Uh, Perplexity can hallucinate. Be careful. Yeah, it can. I know that, and I've seen it give me wrong information on certain situations that I know is wrong. Um, I do find that Perplexity. So all the AIs can hallucinate, but I do find that Perplexity is generally speaking really good on just like equity data and information that I want that's related to markets. I'm not asking it to put together trading plans for me. I'm asking it, hey, can you give me some information on the financials of XYZ company, on the forward PE or whatever, uh, buyback, and I find that that's pretty good in that area. Old NWA reference. Okay, missed it. All right, guys. Anything else? I mean, it was kind of a quiet. It wasn't an inside day today, was it? Was it an inside day for the spies? Did we break yesterday's low? Oh, it was an inside day. Yeah. So we had an inside day for the spies. We had a very tight inside day for the Qs. So, maybe there's a chance that with the next divergence, we can get an inside and down, and that could get us through the ADMA on the daily if we get anything negative at all tomorrow. So maybe there's still a chance for the Bears. But overall, here, the market is looking really bullish still after today's reaction on the PPI. So we'll see if that changes at all tomorrow, which is the last day of the week. On Monday, we begin to go kind of into our, at least the beginning portion, because it kind of ebbs and flows. But we go into the beginning portion of the corporate buyback blackout window. So, that could reduce a little bit of our underlying bid. And then I think next Friday is quad witching with options. So sometimes that options week, sometimes the options expiration loosens the market up after the fact. I've also seen it get front run where it loosens the market up a little bit the week of. So, maybe next week if we are losing the buyback and we're getting OPEX, maybe this market, which has just been very boring, steady uptrend up and to the right, loosens up a little bit. I do think that we should also pay attention to, the stock market's at highs here, and I said something in the morning meeting that we should pay attention to. When the stock market's at highs, we know that Trump tends to be a little bit more emboldened with some of his actions, and we know that with a looming deadline in early July for the tariff pause to end, Scott Bessent was saying it might get extended. Don't be surprised if we see Trump come out with some negotiating tactics like we've seen him do in the past. I'm going to increase tariffs to 30% on every country that doesn't have a deal done with us by July 9th or July 7th or whatever the date is. So, that could start happening over the course of these next couple of weeks as we get close to the end of when the pause is supposed to be. So maybe we get a little bit of a shakeup with some headlines in combination with OPEX, in combination with the corporate blackout window ending. But I'm just going to keep repeating the same message that I've been repeating for a couple weeks. The market technicals are bullish. There's a million and one reasons to be bearish. But the most important reason to be bearish would be if the market's giving you a technical signal. There is no technical signal to be bearish. If any of your bearish reasons want to manifest themselves, the technicals will show it to us. We'll break through a support level, we'll break through a trend line, we'll break through a previous breakout, we'll get a bearish engulfing data to take notice of Maribozu candlestick. Maybe the opposite will break higher and extend, have spot up, vol up, get, parabolic move to the upside. Something will happen that will give the signal. So there's a lot of reasons to be bearish in thought process. If we do get a real pullback, which is an if, you don't need to be short from the high of the market to the penny to be able to make money from it. Let it come to you. I really think that's the theme right now for anybody that's trying to be bearish, because otherwise you're just absolutely and utterly pulling your hair out. And I know to some degree that's been me. I've been pulling my hair out a little bit because I'm trying to follow my game plans and some of the shorts I have on in the face of a market that just is really strong. But you guys know I'm a stickler for my game plans. So on that note, I'll end it. Have a great night, everybody. I will see you all tomorrow.